Okay, ladies and gentlemen, let's go back to support and resistance strategy and all of that. Before then, I just want to take a small entry and I'll show you more detail about it. This one is NAS 100. So take NAS 100. Yes, that's what it is. NAS 100. Okay, that's US 100. Okay, so I can just put this lot size. I want to do little, and then I'll go to why I actually take this position. So I'm running a position in floating loss. So now let's go to support and resistance strategy, as it were. Now, so go to our trading view. So here is it. I'm actually on this guy before now, and I will show you one thing that happened and why I took a trade in the morning, although not on this broker. Okay, we're on profit of $2 and all of that. So if we go there now, let's look at support and resistance strategy. Here you have. So what I do, if you are a day trader, so 1 hour, so you see that I actually mark this range. So if I go to 1 hour or even 4 hours, sometimes I start from 4 hours so that I can combine both day trading and scalping, or day trading, day trading and scalping. Okay, so look at the trade I just entered. So $1 something, so whatever. So this is like gambling I did. Okay, so I'll have to close it in case I will forget not coming down here. So, but now, so let's go to support and resistance strategy. If I was in, I will show you how I actually use my simple support and resistance trading strategy to scalp. Very easy to scalp. I can tell you right. Very easy to scalp. Okay, very easy to scalp. I can tell you that. So we're not in the market. So in order not to be against the market, so I'll close it, right? So now let's go to the trading view. I will have been in profits before now because look at where I will have entered the market. So 5-minute trading scalping. So when I came in the morning, I actually took trade here. And so this is a simple thing. Ordinarily, what you're supposed to do is to look at the previous day high and low. All right, the previous day high and low. So why I close this trade is that it's very difficult for you to be trading and doing training. So I do daily trading, the daily trade low and high. So this is 4 hours. So sometimes I just box a range. So if you look at this market, this is 1, 2. So let's say 1, 2, 3, 4, 5, 6. Today, so the market seems to be ranging, right? Market seems to be ranging. So this market is actually coming up. Now, but we have no justification. We just gamble and enter into it. So that's why I have to close it, right? So now let's go to the trading view. I box these two ranges, right? And what do I connect? I look at it down here. And here was not there when I boxed this place. So here was here and all of this. So now, first thing you want to check is that where is the previous day? Remember, I said, so let's go to, I haven't boxed on 4 hours. I just create a range of 4 hours. Okay, I will create a range of 4 hours. So as a day trader, you're working with 1 hour, 15 minutes, and of course, 5 minutes. Okay? Oh, obviously. So now you're working with 1 hour, 15 minutes, and 5 minutes. So now I said, first thing you want to do is to right click on your trading view and go to your settings, and then go to event and put in session breaks. Session breaks. And then what to do now is that I want to mark yesterday low. and this was here. So you go to your trend line and draw to get yesterday low. Then I want to mark yesterday high, right? So yesterday high was here. And that was why you see I put it. So you just double click on the line and then go to text and then tick this one, right? And then type PDH. That's previous day high. So put it in cap, PDH, and then I click OK. So here you have it, the same thing you do here. Now, so I took trade here in the morning. Of course, I went to lower time frame because you're a scalper. So my target was that the market, right, all of this up back to this point. Remember, this was the previous day high. Now, when I'm looking at the market, once the low is taken, the low is swept by liquidity now. The low is swept. I'm expecting the market to rally to the high. And what will make the high, because these are actually like a demand zone, what will make the high to deliver is presence of much liquidity. And so that's why we said 4 things matters: price action, liquidity concept, volumes, and discipline. So if that's the case, what do? There are other key levels you want to mark out, maybe a turning point for swing low and swing high. And obviously, we have already in 4 hours, I've stretched this like a zone for me. Now, since I've stretched this like a zone for me, was very simple. Now, this is what I want to do. I mark here high and the low of the previous day. Then, what do you wait for? Okay, the market is actually at the bottom here when you come into the market. For instance, this is the breaking of the day, new market open. So what do you want to do here? Nothing. Say, can I not sell down? No. So you have the high and the low. So you have the market to rally down either to the low or to the high and grab either. So good enough, it came down to the low, right? All of these, because this was the previous day. Now it jumped to this point, but that was not a proper sweep. But of course, you probably may find an entry. So let's go to 15 minutes. Now, why I go to 15 minutes is that you may have some imbalance at a point, right? You may have what? Imbalance at a point. So since we could have an imbalance at a point, meaning, so, but here, all you had here were liquidity, and all of that back up to the demand zone up here, right? Before this massive sell down, then you can see how funny the market was yesterday. If you are not a scalper, you probably will not find any trade yesterday. So if I want to now mark out points, you can see it here. These are another areas I will mark to see like a swing where liquidity can lie, but these are just going to grab up. Now, very simple. I found this and I marked it out. So remember, as at the time you come for the day, this was where the market was dialing, right? And fortunately enough, the liquidity was not swept properly, but you are a 5-minute scalper, you must find a trade. So how do I mean? You will find a trade. Look at it. Let's go to 5 minutes. So you're going to find a trade, but you are cautioned anyway, taking your profit. Because I look at the overall, short term, maybe like 1 hour, 2 hours was bearish, right? But overall was a bullish. Now, that was why there was a signal I sent on our group, and I have all these points. So now, we have gone to 5 minutes. So I'm going to get this point. This is a swing, right? So this swing is going to be a support or resistance, right? So that becomes a resistance when you find a trade at the bottom here, all right? Because the market invariably, liquidity have been swept. So sometimes I go to 1 minute time frame to see change of character, but nevertheless, liquidity have been swept, and here you reverse to this imbalance. So this imbalance, your entry is here, your take profit is actually at this and at this point. Now, and that was exactly what I did. Now, enter a trade. I actually entered before this season. So, but let's see, you enter from here. Now, your stop loss, right? Your stop loss is right below the swing low, okay? And remember, you are doing 1:2 risk reward. So let's look at it. Can it actually get to 1:2 here? This is not up to. This is 1:1 point something. Now, ordinarily, you may not take this trade. But because as a scalper, when I went to 1 minute, I was able to see a change of character early. Now, I'm going to show you. But if you look at it, this trade, you were not supposed to take that trade. Let's look at it. Okay. Can you see now? It was not clear at all. But I think when I went to 1 minute, so I got this low and I got this high here that created this low was taken. So the reversal was my entry. That was why I was able to get a kind of sniper entry. So if that was the case, but you have to be careful if you're not smart enough to understand the synopsis, then you may get it wrong. Here, this is a high, this is a low. This high was swept. That's a break of structure. The pullback is my entry, right? So if the pullback is my entry, that means it was simple for me to have entered this pullback here. Yeah, so this pullback here. Okay, so was my entry above. This was yesterday low. So above this yesterday low, so was my entry. And I think I even told people on our group to be careful that because the market is delicate. So 1:2, before getting here, you will have gotten it. So you can see 1:2, we won't be somewhere here. Okay? So, but I looked at this as resistance. Look at it here. I look at it as a resistance and then I navigate towards it, not exactly getting to it, all right? And then allow the trade to run. So you can see the market run and of course, eventually give 1:3. Now, since you understand that this was a resistance, now what you are looking for in a resistance point is a rejection or break and retest. And so we beautifully got to this point and got rejected. So this multiple weeks rejection, so got rejected. Now, you probably may be tempted here because of this engulfing candle, but you already have an idea. This is a rejection. So with this rejection, even if you cannot enter here, you're going to find an entry somewhere here. And so if you go to a higher time frame, you probably will see it. So that means I'm looking for an entry and put my stop loss above here. Now, all this I'm mentioning is possible if you are scalping, just stay in an instrument. All right. If you are scalping, just stay in an instrument. So 1:2. So you can see 1:2 risk reward. There you go. Now the profit has delivered. Now this is the challenge you probably may have at a point. All right. This is a challenge that may happen. When the market actually got here, got sold, right? As the market got here, got sold, you are tempted to enter back again because as a scalper, your every small chance as it give you a change of character. But remember, extending this out, and giving you a rejection, very massive rejection. The market reacted very well, just like this reaction. The same thing happened here. Now, anywhere here was your entry. Now, 1:2 risk reward, right? Please take note that you are not going to constantly trade on 1 minute. So I only did that now because of what I was looking for. So 1:2 risk reward. So your stop loss this time around is above this. So 1:2 risk reward may probably go back to that previous point. Are you seeing it now? That was your entry. Now, I'm very sure that you are going to lose a trade here. I'm very sure if you stay on that 1 minute, you will lose a trade here. Ask me why and how. The market actually took out this liquidity. This is a low, right? And that's a liquidity for you. And this one, all of these were grabbed and returned back. Ladies and gentlemen, this was going to be a failed trade for you. Because for me and you, we were going to enter this trade, right? We were going to enter this trade. Okay? So with that, you have seen the market return and engulf. Your entry is going to be here. Definitely, this trade was a losing trade. And it's a long one for that matter. Because this is a week, and then you are looking for 1:2 risk reward. It wouldn't have even got anywhere when it will hit stop loss. So I'm sure you can see what I'm doing now. So as it hits stop loss, no problem. So what we are looking for is, so fortunately, if you were not in a haste, right, you probably will see the trade early. Okay, so but fortunately, this market actually continued, but there is no how you're going to wait for this pullback to have happened. Another advantage, where we'll not talk about using indicator just to see the market movement. So when you are using 50 moving average, so because you don't want to take trade that is below 50 moving average. And now here, a sharp rejection at this support, a resistance level, and then it goes down. Now, this market continuation, this your moving average, 50 moving average, wouldn't allow you to take this trade. Sometimes you may want to disregard it. Now, let's go to momentum indicator, which is your RSI. Right? So look at your RSI. So your RSI, of course, was bearish even from here. Okay? Your RSI was bearish. And so continue to get bearish. So the market continued to whack down. So below 50 moving average, not 200. Okay, you are a scalper, day trader, you're using 50 moving average. The 200 moving average is not necessary here. So anything below 50, you want to be shorting the market, and that's exactly what happened here. So now let's go. Let's go here now. So the market continued to go down. So let's return back to our 5 minutes. So 1 minute, you have to be extra careful, right? So this is 1 minute. Not that you cannot scalp on that. Now, if I'm scalping on 1 minute, look at what happened. Here, every time you might look at it, market gets here. All right, so let me use this. Every time markets create a low, you mark it out to be a support level. What you want, that market rally up and come here to bounce or grab liquidity and then return back above. At this point, it didn't bounce, rather jump down and didn't return back. Returning was rejected. So that means this failed. Now you are going to carry over. So let's carry over. Here, another support was created. This can do here, right? Exactly. So you can see the discipline now. So the market, this is a support. Of course, remember you are still below 200 moving average, 50 moving average. And of course, market got here, reversed down. There are chances that me and you were going to short this market. Now, if you short this market, but why you may not short it is the fact that you are tentatively looking at when will the market return back. So you are waiting for this to actually grab this liquidity and smartly return and jump above. Chances are there that you will not enter this trade from here. You probably will enter with your moving average. And if you look at your RSI, at this point, your RSI has climbed up. So at the time your RSI, so I use different RSI style. Let me see here. Okay? So now let's go. Now, your RSI is above, I'm bullish here. All of this point, as far as my RSI is below here, don't mind me. That's the way I set mine. As long as we are below here, we are bearish. Now, an attempt here was to be bullish, but you are waiting for this confirmation. Good and fine. The market returned back over here. Now we are bullish. Bounce above here and retested. Now let's look at this retest. It's exactly this bit. So that means you are actually entering market from here. Now, if you enter market from here, see where the danger is. Where the danger is that your stop loss may be very bogus at this point. And that's exactly what happened here. So this support and resistance strategy worked for me massively. So this is above 50 moving average. So you are going to have a very big stop loss, right? That's about 40 points or something. And if you do the conversion, you know how much it's going to worth. All right. So 1:2 risk reward. Let's go. Fantastic. It's not even too far and was achieved, right? It was achieved. But remember, this consistently now become resistance. There are two resistances here. Let's cross this one out. I've told you when you are day trading or scalping, one instrument will be better off for you. So that's one of the things you need to understand. At a given time, not necessarily that you cannot have more than one instrument you are having as a watch list, but the narrow the unit volume of instrument you are trading, the better. So now let's go. The market delivered and then rejected. So what's the rejection? Now, this is already a resistance point. I can tell you that chances are there because two things I'm going to check here is this. One, I mark this as a potential resistance. All right. Now, I want the market to come down. For the fact that we are both 50 moving average, this is a rejection. The market to come down. All right. Now, this is where the psychology not setting. But if you don't take used to one instrument, you won't build that confidence. You will be dialing. Are you sure? Are you not sure? Because why? We are above 50 moving average. Now, at this point, the market has covered this and returned below. This engulfing candle is very, very likely that your entry may be here. Yes, agree with me. Very, very, very likely. Felix, my entry will definitely be here. Now, but the good news is your stop loss is definitely going to be above this. Now, one thing I always say is that once you set your stop loss, allow the trade to run. If it's going to give you stop, let it give you loss. So 1:2. Oh, it's even close, yeah. 1:2, as short as possible. One of the things is that why you can even scalp 1 minute, 5 minutes with all of this like NAS, US30, gold, they have good volume. And so you can get the structure you are looking for. So for anyone who again to wait for this resistance, which is a very beautiful one, all right, you will still get a trade and your trade will stop here. And that's 1:1, 1:2. Now, so here we come. This is a potential support. You draw it out like here. Okay, sorry, just a moment. Okay, so you draw it here. Oh, okay, here. So stretch it out. All right, so here we go. It's been stretched out. So what you wanted is that market come up. And of course, it's a rejection. Chances are there that you will sell here. And you are likely going to lose. So here we come. The market do the same thing. You want it to break. You want it to break and now retest. So that means like here you are still waiting. This is another support that you are going to draw again here. And so in this drawing, you want the market to actually sweep the liquidity or bounce on top. And now it has created bounce, which is like retesting the demand zone, then an engulfing candle. Chances are there that you may not enter here. Your entry confluence you have here is above 50 moving average, above the previous day low. So that means your entry is here. Now, so let's look at your entry 1:2. Now, remember, I said when we're entering the market, we enter like 2 positions and trail one, while one to take profits. So stop loss below here, 1:2. So let's look at 1:2. 1:2 is done here. And now, because your 50 moving average continued to rally up, so anything still above your 50 moving average, you are still good. So that means for any position left, you are above 50 moving average, you may trail your stop loss above this, below this resistance that have turned to support, and market continue to rally. Now, as it continue to rally, push back again. This is like a consolidation, and then push back, another bounce. Now, if you are confident enough, you are definitely want to look at adding more position here and targeting here. See one wonderful thing. The market just got exactly towards the yesterday low high, and then you have a sharp rejection. Here, I formed a tentative support or resistance. Here, the same thing. And now if you mark it out, you grab it and return back. Now you have 2 confluences here. Here was a resistance. And so here is a liquidity because someone say it's going down and short and put the stop loss, or the stop loss grab and see the massive down. Oh, this one is dangerous. So that massive down, now you are going again back to this point. Now, but if you are not trading one instrument, ladies and gentlemen, I can promise you, you will not be disciplined like the way I'm just explaining this. All right. So you can see the market continue to have a downtrend, and look at it continually having a downtrend. Now, here we come. The same thing happened here. You have found a tentative support here. Okay. So what you want is a grab of liquidity and return. And once now above here, you are not taking it serious. But now it's above here, right? And now retest, your entry will probably be here. So 1:2 risk reward. It's better you take your profit and return back than to be enduring in pains that, oh, if I had known. So your stop loss below here, so let's say considerably okay. 1:2 risk reward. Oh, it's too much. It's already there here. Okay, good. Another one happened here. This is the resistance. Return back here. This is a liquidity sweep. Below this, this is your entry. And 1:2 risk reward. Why we have started this class was when this opportunity was presented. Although this is 1 minute, so you got to be careful. There's so many strategies we use in 1 minute. You can add some indicator that are smart sniper entry indicators. So 1:2. So 1:2 already hit, right? So can we go down more? Then that means we can go down more. We may make use of this. And so what are we looking for on this? Either a bounce or break, sweep this liquidity, return back above, then we want to buy. But for now, we cannot buy, we cannot sell. It's like a no trading zone. So returning back to 5 minutes will give you a different thing altogether, right? Okay, so you can see 5 minutes now. Remember, because you are a scalper, You want to scalp and day trade. Okay? So this is a pure liquidity sweep and a sell. So you can see, look at this, that pin bar, whatever. So you are in 5 minutes. Of course, you have seen, if you are scalping, you will have gotten an entry at this point, right? So if you look at it on 5 minutes, this is like a fair value gap, right? So may return back to the demand zone and then before pumping up. But that doesn't rule out the fact that we are seeing a downtrend. But looking at your 5 minutes, you are below, right? You are below 50 moving average. If you look at your RSI equally, it's below this point. So this is bearish. So any buy you are buying now is like a counter. Though this is 5 minutes, so all of those time frame, that's why you need to see the perspective on higher time frame first before taking any move, as it were. Okay, so we are looking at this market either to sweep the liquidity completely, fill the gap, and tap into this. Then if we're going to have a bounce, then we'll now find an entry. All right, you see why I told you I have to close that trade that time so that I don't make a mistake. Right? So if you go to 15 minutes, which is for day trading, right? So you probably will not find all the short opportunity, but the safety of your account on a higher time frame is higher. But to pass some challenge, you may need to combine both, right? Scalping, day trading, and swinging. If not, you'll be waiting for as long as possible and may not find any trade. Let's go to the 5 minute. Let's go to the 1 minute. That okay. You can see it is beginning to go sideways. So after the sideways, you then decide to know where you're going to push to. Is it down to sweep the liquidity or continue rally down? So ladies and gentlemen, so report and resistance strategy is very, very simple to manage, and you can be in good money if you can obey simple rule and instruction. So I will have done some example on gold, but I think this will serve a thorough reference for other instruments as well. So support and resistance, you want to mark previous day high and low. You want to mark some pivot points with like support and resistance, right? Okay, you want to scalp the trade and intraday with it. For scalping, 1 hour to 5 minutes and 1 minute. For intraday, for day trading, can be from still 1 hour to just 15 minutes, 1 hour to 4 hours to 15 minutes. Then intraday can be daily, 4 hours to 1 hour and 30 minutes, even up to 15 minutes for good confirmation and all of that. It's amazing, man. So, guys, no excuse. No excuse at all. I was just experimenting with this guy. So today was when this profit was bought, $20,000 account, challenge account, but maximum drawdown is 6% and daily drawdown is 3%. So which means $600 is the daily drawdown. So the formula I use is very simple. So since it's $600, that's my daily drawdown. So 10% of my $600. So how many stop loss will I actually be able to do? So $600. And if I'm going to use 10% of this per trade, and let's say I'm enjoying stop loss of 100 because of gold, so that means what I'm going to use 0.03, 0.06. So I can divide into 2 or divide into 3, 0.02 in 3 places will be my entry. So what you're saying is if the markets go against you, you will lose $60, right? So if you lose that two times a day, you have to suspend your trading and wait for another better day. You make the profit one or two, three times in a day, then there's a need for you to go off and rest. Okay, so that's one of the lovely things about this strategy. Support and resistance. It's an amazing kind of strategy. You want to learn more and go more detailed to be more professional in it. So there may need for you to be committed and decide to sacrifice to acquire whatever thing it will take for you to have the skill. Okay? So that support and resistance strategy is very simple. It make you money and you have rest of mind. So you want to be part of our community, trading using different tools like Arcas X, then passing some challenge account, then don't hesitate to chat with me on phone number only on WhatsApp, +234 +90 +23490, right? 470 44 and 998 +234 90 470 44 and 998. Right? So, ladies and gentlemen, that's what it is. Don't joke with this trading opportunity and style. It will help you a lot. My name is Midas Jimo, the team leader of Plan B Express. Thank you, and do have a nice day.